U.S. consumer prices dropped 0.1% in December, signaling easing inflation in the world's largest economy and fueling hopes of slower rate hikes from the Fed. Wall Street rallies. The Nasdaq sees its fifth straight day of gains. Stocks in Europe closed at their highest level since April of 22. Asian markets trade largely higher, while the SGX Nifty 2 indicates a positive start for the Indian market. Cooling inflation in the U.S., a weaker dollar, and hopes of higher demand as China reopens boost crude prices. Brent gains over 1% to trade near $84 a barrel, even as it comes off the highs. Inflation eases in December to 5.7%. A sharp drop in food inflation led by a fall in vegetable prices keeps it below the RBI 6% threshold for the second month running. India's factories are firing on all cylinders once again as industrial output in November accelerates by over 7%, beating estimates. Infosys beats estimates in the third quarter, revises its full-year revenue growth guidance upwards and maintains the outlook on margin. Deal pipeline remains healthy at over $3 billion. HCL Tech also delivers a beat on revenue and margin. The deal wins remain steady while attrition too moderates. And another tech giant, Wipro, will report its first quarter numbers today. Dollar revenue growth is seen coming in at a little over 1%. The street will also keenly watch for guidance for the coming quarter. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines. There's so much data coming through, earnings coming through, so we have lots to talk about. But first up, a look at the Asian markets, which are pretty much all higher, barring just the Japanese Nikkei markets. We got that positive handover from Wall Street. Taiwan and Korea leading the gains this morning with around 1% in terms of gains for both of these. Hang Seng is quite flat. The rest of the Asian markets also in the green, but no big move coming through. The Nikkei is the only one, which is around 1.2% lower. So that's what's going on across the Asian markets. The SGX Nifty will come up for you, and that is indicating a positive start for our own markets. It's currently around 33 points higher. So that's what's happening across Asia. But let's also talk about the US now. The session yesterday ended higher on the back of the US December CPI report that showed a fall in consumer prices for the first time in more than 2 years. So the Dow Jones ended with gains of around 215 points. The S&P 500 finished around 0.3% in the green, and the tech-heavy Nasdaq Composite rallied for its fifth straight day, and it put on around 0.6% at the close. All right, Steve, thanks a lot for getting us all of the highlights from the December inflation report. But with that, let's also bring you the final update on our global market wrap this morning. European markets ended a choppy Thursday session with the highest levels that we've seen since April of 22, following the inflation report that came out of the US. So the French CAC index was up around 50 points. The German DAX index was up 110 points at the close, and the FTSE also closed with gains of 69 points. So all in all, it's been a good reaction that we got to the CPI report. But that's everything that's going on globally. Let's now talk about the cues that you should track as we get into the final trading session of the week. We have Ekta and Mangalam joining us to fill us in with the trade setup and the individual stocks that you should have on your radar today. Guys, a very good morning. And Ekta, coming to you first. We did see some red yesterday, but the global handover is quite positive this morning.
Morning, Pavitra. Yes, absolutely. The markets did close in the red, but they were sharply off their intraday lows yesterday. So the Sensex fell around 147 odd points and the Nifty around 38 odd points. Now, FIIs continued to net sell, so they net sold over 1,600 odd crores. We have seen this trend continue, and the DIIs net bought around 2,127 odd crores. So net the institutions were buyers. Now, the India CPI came in at a multi-month low, 12-month low, came in at around 5.7%. So that was a positive. And the US inflation, we've been talking about that since last evening, came in line with expectations at 6.5%, the lowest that we've seen in 13 months, and below 7% for the first time in 1 year. US markets ended higher, Asia largely higher at this point in time, and the SGX indicating a positive start as well. Now, oil has risen on account of US inflation data as well as demand hopes, and back home we do have a lot of earning reactions. Infosys, HCL Tech. Earnings today include Just Dial, Wipro, L&T Finance Holdings, and tomorrow's HDFC Bank as well as Avenue Supermart. So keep your eye out on Q3 numbers.
All right, it is going to be a lot about these individual names. But Ekta, hold on, also take us through the individual stocks which should be in focus today. You did mention, of course, the tech majors on the back of their earnings, but what else should we track?
Well, yes, L&T Tech they're going to be acquiring L&T Smart World and Communication business. So that's going to be in focus on account of an acquisition. Natco Pharma, the court has set aside a patent granted to a Novartis drug. So there will be competition which will come into the domestic market Jan 16th onwards. ITI has bagged a 25 crore worth laptop order. So that's going to be in focus. RVNL has won 39 crores worth of an project also. So that stock will continue to be in focus. Rama Steel Tubes MOU with Uttar Pradesh government to set up a steel processing unit. Linde India starts construction of a new air separation plant in Punjab. Shah Metallics implements 1.2 MT of a pellet capacity 8 months ahead of schedule. And Shriram Finance P Fund Apex Partners plans to sell shares via a block deal today. This is source based. A lot of stocks to focus on.
All right, a lot of stocks to focus on. Ekta, thanks a lot for running us through that entire list. Finally, we also have Mangalam here to talk about all of the cues from the futures and options space. Mangalam.
Good morning. So we've been consolidating in a narrow range over the last few trading sessions. The Nifty is facing resistance upwards of levels of 17,950. That's what we saw yesterday's high as well, was 17,946, coincided with the previous day's high of 17,976 itself. But at the same time, we're seeing support at lower levels too. In fact, the December low of 1774 was something that held on yesterday as well. We bounced back right from below those levels. 17,761 was the low in yesterday's trading session. And as a result of which, it was weekly options expiry. The Nifty closed exactly in the middle of the range, which was expected by options writers, and which is something that we pointed out yesterday as well. The FIIs sold in the cash market to the tune of 1663 odd crores. The DIIs went ahead and bought 2128 crores. So for the first time in the last couple of days, we saw the institutional flows being positive, and the SGX Nifty is indicating a positive start. So what are the big triggers to watch out for today? Of course, we will watch out for any reaction coming in post the US retail inflation coming in line, and secondly, Infosys results. Why am I speaking about Infosys results more? Because the Nifty bank is run into a bit of a resistance, which was a leader earlier. So can the IT stock support? The Nifty bank had a high of 343 yesterday, and that coincides with the 50-day exponential moving average of 42,369. The FII sold in the cash market yesterday to the tune of 556 odd crores, and their longs have now dropped just to 38%. So if this SGX Nifty bounce sustains and we go closer to levels of 18,000, perhaps some short covering is in order. All that we'll have to watch out for the way IT stocks react and the Nifty bank reacts today.
All right, let's wait by and see how both of those, sectors react and whether we can sustain the opening gains. Mangalam, Ekta, thanks a lot for joining us and prepping us up for this trading session. With that, we're going to get into a short break. But like we told you, IT big boys Infosys and HCL Tech posted their Q3 earnings. We'll get you all of the highlights on the other side. Hey guys, welcome back. You're still tuned into Power Breakfast, and let's now bring you what was a double delight for the economy. Inflation is on the mend and growth engines are firing once again. So inflation in December eased to 5.72%. This is lower than the reading that we saw last month in November, and it is for the second consecutive month. It has come in below the RBI's threshold of 6%. So that's good news. Further, we also saw industrial output in November accelerate by 7%, which is the highest rate of growth that we've seen in 5 months. So Lata is here to wrap up all of that macro data for us.
Yes, it's a pleasing set of numbers as far as macros are concerned. Inflation number at 5.72, far less than the CNBC TV18 poll. But I think the more important part is now we have the October, November, December numbers. And if you look at the average for the quarter, it works out to 6.1. The Reserve Bank, as recently as December, had forecast that number at 6.6%. So a good 0.5% lower than what the Reserve Bank had forecast in terms of CPI inflation. And it's not just the headline CPI, which is at 5.72. Food inflation also down to 4.19 compared to 4.67 in the previous month. This month also, that is December, the expectation was things would stay there. The expectation was that vegetables would fall, but cereals and pulses and milk could be higher. The pleasant part is vegetables is much lower than expected. It's about a 12% fall month on month itself. And of course, year on year also a very sharp fall. Plus, the cereals have not gone up as much as we thought. Pulses are a very modest 3% year-on-year growth, and fruit as well, just coming in 2% higher. all told, the composite picture in food is extremely pleasing. The only fly in the ointment is the core inflation coming in at 6.1%. This is, of course, gold prices are higher and services prices generally a bit higher. That perhaps is the only thing that will hold back the Reserve Bank. But there is now a general expectation that at best there is one rate hike or perhaps a pause in the month of February. So expect some positivity in the bond markets. The other positive is actually the IIP number. The poll was expecting only about 2.7%. There were other polls at 3 and 4%, but no one was prepared for a 7.1% rise in the industrial output for November. It's been an all-round good performance with electricity coming in 12.7% higher. The core sector gave us a different picture. Manufacturing coming in 6% higher. Mining coming in over 9% higher. And if you looked at the use-based classification, consumer non-durables, which has been sulking for a better part, coming in almost 9% higher year on year. Consumer durables as well over 5% higher. Capital goods 20% higher. So it's been an all-round positive performance on the industrial output. Absolutely good news on macros. Inflation lower than expected. Growth better than expected.
All right, very good news coming in there on the macro front. But with that, let's move on and talk about some key earnings that came through yesterday. IT heavyweights Infosys as well as HCL Tech posted their earnings. And for Infosys, we actually saw, a good showing this time around. So Rima is here to break down the numbers for us. Rima.
Thanks so much for that. It's a very strong showing from Infosys this time. A revenue beat, a guidance upgrade, very strong deal wins. But there is a bit of a margin miss. But on the whole, it's a good quarter. So let's tell you about the numbers. Revenue growth has come in ahead of expectations, 2.2% in dollar terms. Constant currency revenue growth has come in at 2.4%. EBIT margins are flat at 21.5%, and this is despite 40 basis points benefit due to the rupee depreciation. In fact, both Infi and TCS have reported a revenue beat and a margin miss. But if I compare the revenue performance, Infosys growth rates are stronger than that of TCS. The big positive was the fact that revenue guidance was revised higher. It now stands at 16 to 16.5% constant currency revenue growth for this year, which compares with the 15 to 16% revenue growth that they'd earlier guided for. In fact, every single quarter of this year, Infosys has gone ahead and upped the guidance. The deal wins are also very strong. Deal wins, the highest in the last 8 quarters, have come in at $3.3 billion.
All right, Rima, thanks a lot for taking us through Infosys' earnings. In fact, my colleague Ritu also spoke exclusively to Salil Parekh, CEO of Infosys, to listen into what he had to say on the performance.
On the guidance, we've had a very strong large deals win for Q3, and we've had very strong growth in the quarter, 13.7%. Keeping those factors in mind, and also looking at the points where some of our industries we are seeing a different economic environment. For example, in financial services, in mortgages or investment banking, in telco, in high-tech, retail, so on. Keeping all of those factors in mind, we've increased the guidance. Specifically on Q4, we don't provide a quarterly view of that. We only have an annual guidance.
That's right, but the implication is because you revised up the guidance for the rest of the year, will we see a bit of a muted growth? And also, if you could comment on, the EBIT margin, you expect to be at the lower end of what you guided?
On the Q4, so first, with the change in the guidance, typically Q3 and Q4 are seasonally weak quarters for Infosys in any case. So those factors still continue. On the margin, we had a very good operating margin in Q3 at 21.5. We've kept the guidance, which was narrowed to 21 to 22. We've kept it at that level. And we've also made the statement in the comments earlier, it'll be at the lower end of the guidance.
While you do not give any guidance for the following year, FY24, what is the feedback you're getting from clients amid, the macro trends that we're seeing? There were large deal wins. You won 32 large deals in the quarter. Will that kind of a deal win rate continue?
So our pipeline for large deals is strong today. We have two engines of growth really. One is on digital and cloud, and one is on automation and cost efficiency. So depending on how the environment changes, and it's different industry by industry, we feel that we are well positioned to sort of help our clients in both dimensions. So we continue to see that as the approach ahead.
And you've already flagged off certain sectors where you expect some sort of weakness: high-tech, telecom, retail, and now also BFSI. How long do you expect that to continue, and when do you expect things to improve?
So there, we've not put a time frame on that. We've more talked about what we've seen in Q3. And as things evolve in either direction, we'll start to talk about it.
How do we read your hiring figures? You'd guided for 50,000 fresh hirings for the year. You're at close to 46 now, but it has come down quarter on quarter. Are you expecting a slower growth? Should we read it as that?
So there again, we don't have any view that we share on the growth for FY24. Our focus really is on the guidance and the growth for this year, which will end in March.
All right, and attrition is now at a 5-quarter low. Do you expect that trend to sustain, or has that been a one-off?
Attrition, as you point out, is going down every quarter for us. There were several policies that we put in place, several changes, much more aligned with the employee expectations, their career development, their training. And many of those things, I believe, are helping us with a very sharp 6-point reduction attrition this quarter, but also in the previous quarters.
And a final word on margins as well. Despite this kind of rupee depreciation, margins have remained flat. Any outlook you could give us for the coming quarters?
On the margin, I think we have the guidance for this financial year, but beyond that, we don't have a guidance for the next financial year on the margin.
All right, that is the management of Infosys telling us that the pipeline for large deals is strong, but EBIT margin for the full year is likely to come in at the lower end of the guidance, and not really willing to tell us too much about FY24. But Rima is still with us. Rima, HCL Tech also reported its earnings. How's it looking?
Thanks so much for that. So it's a beat from HCL Tech, both on revenues and margins. So dollar revenue growth of 5.3%, expectations 3.5%, constant currency revenue growth at 5% has come in at 5%, much ahead of peers like Infy as well as TCS. In fact, now all the three IT companies have reported a top-line beat. But where HCL Tech scores over its other peers is the margin performance. HCL Tech's margins have expanded by 165 basis points. It's a big beat, coming in at 19.6%. Peers had reported a margin miss. FY23 guidance has been tweaked. So revenue is now standing at 13.5% to 14%. Margins are now at 18 to 18.5%. Doesn't come as a surprise. And deal wins are steady on a sequential basis.
Okay, good quarter for HCL Tech, and you can catch the management speaking with us today on their earnings fine print at 9:30 a.m. in just a bit from now. But with that, we are going to get into a short break. When we come back, we're going to track all of the cues from the commodity markets. Once again, it's all about oil. Welcome back. You're still tuned into Power Breakfast, and Manisha is here to bring us an update on what's going on in the world of commodities. Manisha, once again, the crude prices continue to trend upwards.
Oh, well, yes, they are, and it's 2-week highs for the crude oil prices, and the prices have gained for a 6th straight day. Markets are looking at China making efforts to boost economy, and the U.S. inflation data coming in on the weaker side definitely has been a big support for commodities. And the major gainer hasn't been crude, it has been gold, where we are trading at $1,900 per ounce. This is going to be a 4th straight week of gains for gold. It's trading at an 8-month highs right now. And with the U.S. inflation data coming in, the U.S. dollar index has now declined to a 7-month lows. There is a fall in treasury yields, and that in turn seems to be supporting the precious metals right now.
All right, Manisha, thanks a lot for bringing us that update. But with that, we're going to wind down on this edition of Power Breakfast. Most of the Asian markets are in the green. Hong Kong has slipped into the red, but most of them are, trading quite well. The SGX Nifty indicating a 40-point bump up. Thanks for tuning in. Bazaar Morning Call up in 2.